Vaidyanathan of IDFC First Bank. That's the new name and the new brand. Is going to be joining us in seconds. Is he with us?
Yes, I'm there with you.
In an interview, you did say, no, wait for the merger. Well, the merger is done, and here you are on the channel. Thanks so much for joining us. Now, with the merger done and dusted, so with the merger completed, IDFC First Bank will now offer, I'm assuming, a wide array of retail and wholesale banking products. What's the strategy to grow in the sector to be a market leader?
Well, market leadership is far away. I'm not even talking that language because we are effectively a startup bank. But I can say that the customer proposition becomes much wider because as Capital First was specializing in lending and lending alone, I think the product suite becomes larger. IDFC Bank also has built fantastic technologies and built a branch network of 200 branches. I think they are also in a good place. So I think together, when you put together, to the same customer, we'll be able to offer, overdraft solutions, credit cards, personal loans, bank accounts, savings, current accounts. Our proposition can be more complete, and therefore we can have, we can hope to get be of much better service to the customer.
So Vaidyanathan, you said that you are practically a startup bank. So startups, as we have seen, love funding. They go out to get funding for the next wave of growth. Is that something we can expect at IDFC First? Is that something which is on the cards? How is this part going to carry out, and especially to get the synergy benefits in?
Well, as far as synergy are concerned, there are many. Number one, of course, as like I said, when we sell more products, our operating leverage becomes much better. And as far as again costs are concerned, the same branch, all of Capital First branches, to the extent that we could also convert to bank branches. Others will become banking outlets, and that's close to about 75 branches of Capital First, which will also partially, many of them will convert to bank. So in that sense, with the same infrastructure, we can afford to get a lot more. So there are many synergies expected from the merger process. But most of all, I think the extent of energy and drive that we will see in employees today will be much better because they just get a little more excited and energy from the whole process.
Mr. Vaidyanathan, we've always seen, in terms of interaction, integration of any bank, integration of any two different kinds of financial institution. One of the key things is the culture, managing the employees. Do you expect any high-level exits at the bank level? How do you, plan to overcome this challenge, integration of culture between the two different institutions?
The fact is, we've been working for integration for close to about 4 to 5 months now. Ever since we got the first wave of approvals, and it was pretty clear that the merger is certainly happening, we've been working on that. There are many streams to merge, to answer your question more specifically. For example, you got to merge the technologies of two streams. You got to merge the people integration, systems, products, credit, risk. Each one of these have to be integrated and made a combined institution. We've been working hard at this for many years and for many months, and I think it is coming through very nicely. With regard to culture, the really good thing is that both institutions have young, energetic, motivated people. They all want to achieve something. In fact, when we meet people like them, we get more energized than I have to give energy to them. So I don't see any problem in culture integration. I think it will go through pretty smoothly.
My next question is regarding the cost of funding. When you signed the MOU with IDFC Bank, you said that you would have access to low-cost deposit, and that will have an impact as far as funding is concerned. Can you just tell us now, with the bank in the place, the name in the place, and the benefits will start to accrue, what happens to that cost of funding?
The cost of funding for Capital First used to be close to about 8 to 8.5% about a year ago when interest rates were very benign, and of late close to about 9% on the incremental money. At IDFC Bank, the funding cost, as you can see from the annual published reports, is 7.3%. So in a do-nothing scenario, simply replacing Capital First borrowings with IDFC Bank borrowing on the liability side alone will give us a benefit of close to about 100 basis points. Again, on the lending side, the rates of yield of Capital First loans are much higher, maybe 300 to 400 basis points higher than what the loans in the bank were booked. So when we put the pieces together, the liability side benefits will come from IDFC Bank, asset side benefits will come from Capital First, and together net interest margin, which is just now about 1.7%, we believe will steadily move up towards the 4% plus mark in the times to come, just by integrating and growing the retail book.
If I could talk to you more, Mr. Vaidyanathan, about growing the retail book, what is it going to be? Is it going to be perhaps by focusing more on, let's say, physical branches, brick and mortar branches? Is it going to be digital? Is it going to be a mix of both? What's the strategy?
Well, in today's world, I wish someone could be as straight as that. The answer is it's all of these. But to more specifically, we have close to about 200 branches today, and we think that we can add close to another 500 branches over the next 5 years, and that will give us a nice large footprint across the country. Apart from such a footprint, we think that as all of us are seeing how the digital economy is growing, and that architecture is growing through UPI, Jan Dhan, Aadhaar, and all the analytics and data, and all those things are coming together. We think that that is going to be the next big play, and we will find a nice way of doing both to make an integrated play and to reduce operating cost as well as improve customer convenience, because customers are not coming to the branches. In fact, as you know, most people don't. Customers may want to get them service through digital channels, and certainly we will find ways of empowering that.
Now, one of the big challenges that a lot of the banks have been facing is just attracting deposits. Do you foresee that as a challenge at all?
No doubt, it's a very important task and a very important question also. We have a combined retail deposits base of close to about 10,000 crores today as a combined institution, and we do believe that this has to grow multifold from. So all our energies will be focused very significantly on the retail liability side. We believe we have a strong asset machine. The one area we have to work upon is retail liabilities and current accounts and savings accounts. We think that apart from putting up branches, providing good payment solutions is a very key factor. Providing people easy transaction mechanisms is a key factor. Providing customer remittance solutions is a key factor. So when you provide a good proposition and a branch network, and how our people reach out to the customers, I think all pieces put together, this will definitely come. When we wake up many years from now, I will have no doubt that I would have surprised you on the upside on raising deposits.
Right, Mr. Vaidyanathan, as you just said that, you of course have a strategy to go ahead and take the deposits higher. But, recently or in the last 2-3 years, we've seen that some of the banks are offering high rates on savings deposit. However, it's not worked pretty well. Is that one strategy that you would be looking at, giving higher deposit rates, or as you said, that payment solution is probably the key?
Well, one without the other is useless. To give good rates but not have a reach is won't work, or and so on. But certainly, if we think that yes, offering customers a better interest rates on savings than we currently offer is definitely part of the game. We are still figuring out how this will work and what the implications for us are. But our key theme for the organization is, I don't know if you read the new tagline today in the press, we got front page ads, is putting customers first. This is our core theme and we're designing everything around it. Our tagline is IDFC First Bank, you first. So when we think about it in that light, people having saving balance in this country, I think we will, when we put them you first, I believe we will offer them better interest rates, but the details will unfold very soon.
Right, just a word to wind up. Over the next 4-5 years, where do you see this institution? Do you look at double-digit ROEs pretty soon? What are some of the targets that you have when you start this integration today?
Maybe yes, the core ROE today may be 2 or 3% when we start the story because of the integration on a pro forma basis, maybe over the last couple of quarters. But yes, to your question, within 4 years, will we touch a double-digit ROE? I certainly believe so. I believe that the net interest margins will grow. I believe that will straight pass through the P&L. We believe that despite making investments, the core returns of the organization will continue to grow. But more than that, you will physically out there, you will see the buzz. You will see more branches, you will see more touch points, you will see more deposits. You will just see the buzz in the days to come, or probably years to come.
Okay, so we're going to see the buzz in the days to come, attractive deposits. Mr. Vaidyanathan, this is the final question from me. At the start of the interview, you did say you're like a startup bank. I was trying to ask you this question earlier as well. Startups love funding. Are you looking at any kind of investments? Is that going to be needed for the kind of buzz you want to create, whether it's the new branches, the attractive deposits, or even the mega marketing initiatives that you may need to unleash?
Yes, I told you will see the buzz, you will certainly see it. Now with regard to startup bank, and therefore will you see funding? No, we don't plan to raise any equity from the market. It's well funded. And talking of startup, I must also say that Dr. Rajiv Lal and the entire senior management team and everybody has done a wonderful job in building the bank from a infrastructure lender and giving it a sort of a shape of a bank, which now gives a platform for further scaling up when we put Capital First and IDFC Bank together and call it IDFC First Bank.
That's Vaidyanathan of IDFC First Bank right here on ET Now. Always a pleasure chatting with you. Thanks so much for taking the time out and taking us to what we can expect. Here's wishing you the best with all the buzz that you're hoping to create. Well, with that, we're going to take